How's it going, everybody? It's Stas here. So the stock market just closed and it got completely decimated today as the S&P 500 went down 2.6%, down $81. The Dow went down over $700, 2.7% in the red, with the NASDAQ down $200, 2% in the red, and the Russell 2000, the small cap index, got crushed the worst, down 3.5%, almost $50 lost on the day. And in this video, we're going to be breaking down the markets, taking a look at some technicals, going over what could potentially happen here over the next couple of days in the market, and whether or not this is the start of the second crash in the stock market. And as always, we're going to be breaking down what stocks I'm watching and looking to trade, as well as what I've been doing as of late in the stock market. So if you guys find value, as always, hit that like button, consider subscribing to the channel, and check out all the free links down below in the description box if you want to join our Discord chat, our Facebook group, and if you want 2 free stocks from Webull valued up to $1,400. That's free money. Again, all linked down below in the description box. So let's just kick off the video, guys. Again, the markets literally just closed under 2 minutes ago, and right off the bat on the S&P 500 with today's crash, it wasn't a crash, but we'll call it a crash for the sake of this video, this drastic drop, let's just call it that. We can see we clearly broke out of this 4-hour channel, right? And this is a channel that the S&P has been holding, this uptrend channel, pretty much ever since the rebound off the lows, right? If you guys recall, obviously you recall this. Who doesn't recall this? The markets dropped from 3,400 to 2,200, and ever since 2,200 and the rebound following that, we've been trading in this channel. And get this, guys, again, we broke that channel today. And does that mean the uptrend is completely broken? No, it doesn't, because if we take a look and see this trend line that I'm about to draw right now, if we just draw a new trend line, right, let me just quickly erase this channel, you guys can see that we're still technically holding a higher low right now, as the previous higher low was at around 29.70. So we haven't completely broken the downtrend quite yet, but we'll go into some nitty-gritty charts here, the smaller time frames. But if we do break this level at 3,000, 29.80, that is where we might start seeing a further sell-off, right? And before we even get into the technicals, right, what caused this sell-off to begin with? A big reason why the market sold off is because of the International Monetary Fund. We got some news today, and let me pull up my notes here very quickly, guys. We got some news. The IMF on Wednesday, which is today, released an update of its World Economic Outlook, in which it projected the global economy contracting by 4.9% in 2020, a downward revision from its April forecast of 3%. So that caught the markets off guard. That's a big reason, right? And a 4.9% print on global output is now the worst in the World Economic Outlook's history, right? And the CV outbreak has had a more negative impact. This is directly from the IMF. This is in quotes, right? The CV has had a more negative impact on activity in the first half of 2020 than anticipated, and the recovery is projected to be more gradual than previously forecasted. The IMF said consumption and services dropped beyond expectations and described the hit to the global labor market as, quote-unquote, catastrophic. The report forecast U.S. growth, this is another big blow here, of negative 8% in 2020, a notable downgrade from its April forecast of almost 6% of a drop, right? But the IMF, again, the International Monetary Fund, noted that the positive economic data we got in May, remember the surprise job gains in May, points to a possibility that the activity has hit a low point, the decline has hit a low point in the month of April. And to see a rebound, the IMF sees a rebound in 2021. They expect the U.S. economy to rebound by 4.5%, a tick down from its April projection of 4.7%. So pretty much this weak economic data, the weak forecast, is what completely spooked the markets today. Let's be honest. On top of that, we have CV cases increasing. That also contributed a little bit to the market drop today, but mostly, again, in my opinion at least, is this information from the IMF, right? So let's break down some further technicals here, and let me know down below in the comments your thoughts on the economy. I'd love to know what you guys have to think, as always. And going back to the technicals, right, we talked about, again, the 4-hour channel has been broken, but we're still kind of holding the uptrend. So what levels am I looking at on the downside here? Going to this 20-day chart, you guys can see we actually broke 3060 today, and forget about 3060. We broke 3080. That's support from the previous couple of trading sessions, right? And remember, we were trading in a range, right? You guys remember that? We were trading in this little range from 3150 down to about 3080. Well, that was completely broken today. Again, we broke 3080, 3090 to the downside. We did not hold that, but we are seeing some support now right under 3060, which is another big level of support that we broke, and it's now acting as a resistance, right? So at this point, for the S&P 500 at least, we might be going down to 3020. This is another big level of support here, especially since, again, we closed under 3060. So at this point, we're trading between 3020 and 3060, right? And I said in the Discord chat earlier, I posted a screenshot of this 4-hour chart, right? You guys can see this 180 SMA, it also could be a support. This could be where ultimately this little correction might lead us to, especially if we break, again, 3020. We break 2950. That's another big support on the S&P. We might very well be going down to 2900. And at that point, that could be a very intriguing place to actually load up in the stock market. And from my perspective, that's what I personally will probably do. And does that mean you should do it? No, because you always have to do your own due diligence. You guys know I'm not a financial advisor. This is strictly me, my opinion, and me making a video just going over my opinion, right? So just take it just take it for what it is, guys, and always take it with a grain of salt. But you all know that the Fed is really increasing this market. This is a Fed-induced rally, and we know that Jay Powell, the Fed, they're not going to let this thing go bust. There's no way that the S&P, well, let me rephrase that. Maybe it goes back to the lows, but there's no way this thing is going to 1,500, 1,200. I just don't see it possible. 2,000 even, right? Because again, the Fed is using all of its tools to its furthest extent. They're going to do whatever it takes. They're buying corporate bonds. They're buying ETFs. They might even start buying individual stocks, guys, which would be absolutely crazy. And that might happen if these markets do end up getting to pretty low levels like 2,500, 2,400, 2,300. If we do start to go down to those lows, which again, I don't know if we will. I doubt it, quite honestly. But if we do start going there, that is where the Fed might start to pump in to individual stocks, right? So at this point, having the Fed's backing and us maybe pulling down to 3,000, 2,900 even, that could be an excellent entry point, knowing, again, that the Fed, they're going to just do whatever it takes to keep pushing this market up, guys, and aiding the recovery in the economy. At the end of the day, that is what the Fed does, right? And when we're taking a look at the Dow, again, 700-point drop today. We dropped under 25,800. Big drop there. That was a critical support. Now I'm thinking, okay, kind of like the S&P, I think 24/7 is a viable spot for the Dow Jones to pull down to. 24/7 is a big level of support. Would you take a look at this arrow I drew yesterday or the day before in one of the videos we were talking about, right? It's playing out. It's coming into fruition, right? Just like this arrow. We might be going down, again, 24,700. And mind you, that is right by the 180 SMA on this 4-hour chart, just like the S&P. This would be a very healthy pull down and a very good spot for the Dow Jones to hold, right? So we're clearly trading right now between 24,700 and about 25,800. So those are the main levels that I'm watching right now on the Dow from the upside and the downside perspective there. And the Dow Jones, or rather the Nasdaq here, I'm mixing up my indexes today, guys. What am I doing? The Nasdaq is the only one that is looking, well, they're all still uptrending, but this is the only one that's looking extremely bullish still, because even with the pull down today, and you guys know this, we hit an all-time high yesterday, right? We hit an all-time high yesterday at $10,300, and we talked about how a big support could have been 10,100, but obviously that did not hold. That was a resistance from back on the 10th of June. We obviously, again, did not hold that, so at this point, we might find support at 9,900, 10,000 bucks, right on this 50 simple moving average on this 4-hour chart, which is this green line that you guys are seeing right here. So these are a couple of spots that I'm watching across the markets. Nothing crazy, guys. Well, the sell-off was a bit crazy, but the technicals here, they're not too crazy to understand. And quite honestly, the markets have been in need of this pull down. So honestly, I'm not against it. I'm for it. Again, knowing that the Fed is going to do whatever it takes. Many people view this as easy money because the Fed's going to plow in trillions of dollars. Maybe not a couple trillion more, but definitely a couple billion, hundreds of billions, maybe a trillion or two. As they do that, asset prices, we understand this, they go up, right? As the Fed is printing dollars, what happens? The dollar gets devalued, and people take their dollars, and they're like, all right, what am I going to do with my dollars? I'm throwing them in the markets, going with the Fed. You guys have heard this, do not fight the Fed, right? And they pretty much make money as the asset prices get inflated, as they get out of dollars, and they go into dollar-denominated assets, right? That's kind of how it works at the end of the day. So that's the market update and kind of what drove the market down today. It's really just this data from the IMF and of course the CVs increasing, the cases. And I'd love to know what you guys have to think about that down below in the comment section. And as for me, you guys know I'm mostly a swing trader, right? I do day trading here and there, but I'm mostly a swing trader, so I love seeing the markets go down. This is where I buy because swing trading is all about buying into weakness and selling into the strength, right? So you guys know that I was in ULTA yesterday. I bought this stock last week at about $2.15, so I ended up buying a little bit more today on this dip. You guys can see it went down almost $7, down 3.2%. We actually hit $194 earlier in the session, and I bought on this little rebound here. I bought in about, let me check my notes. Let me see here, guys. Okay, $197.80. That's exactly where I ended up buying, so I brought my average cost down pretty substantially, right? And this is really the main reason why I scale into my swing positions because, again, I got in at 215. If I went in all the way with my whole goal position, I'd be screwed. I would have cut out with a pretty big loss, but the fact that I went in with 10%, 15% of my goal position, it allowed me to utilize that extra cash and average down on a stock that I want to swing trade for the next couple of weeks, month or two, right? And that is, again, ticker symbol ULTA here. So I averaged down a bit there on ULTA. I also bought into NEO today, guys. I could not resist. This is a bit of a risky move here, especially as the markets, again, are getting crushed. That gives sometimes small cap stocks, they get crushed even more when the markets go down, overall markets, and NEO saw that, right? At some point, NEO was down, I think, over 10% today. I mean, yesterday we closed at 725. We went down all the way to 650, and you guys recall in yesterday's video, I was talking about if we break 730, 725, which we did a bit yesterday and in the after-hour session yesterday, I talked about how we might go down to the 50 simple moving average around 680, 690, and find support there. And we pretty much are doing that now after hours, although we haven't confirmed the full breakout quite yet. The fact that we're holding 680, closing above that point, That's a pretty good sign for the bulls here. So I personally got in, I believe it was 672. I think it was on this rally back up here off the lows today. And just like ULTA, I'm in with a small position. So tomorrow, the next day, even next week, if the markets go down even further, maybe S&P goes down to 2,900, I could get a better price on NEO, average down, and swing trade that position. So overall, guys, that's pretty much all I did today. I doubled down a bit on ULTA, added back into NEO here, and I was going to pull the trigger on a couple of other stocks we're going to talk about in a bit here, so stay tuned. In a couple of minutes we'll go over those, but I didn't do it quite yet. And I'm also, almost forgot, I'm also holding GDX still. This is a gold miners ETF. They actually were down about 2% today, close to my cost basis now, a bit closer, right around 34.50 is where I got in, but ultimately I still feel comfortable holding this one. You guys know I'm bullish on gold. Gold, by the way, did very well today, honestly. The markets, again, were down 2 to 4% across the 4 indexes here, at least the U.S. indexes. And gold was only down 0.4%, down $6. It's pretty much coasting at the highs on this chart here, the 4-hour chart. We actually broke out of 1680, which was the high from back in the middle of April. So this is very good news. We almost broke into the $1,800 territory. So I'm watching GDX. I'm in GDX. And another gold ETF I'm watching here is GLD, which pretty much just tracks the price of gold. It's different from the gold miners ETF. That one's a bit more volatile, the one I'm in, GDX. But GLD, like I've said on the channel, it just follows the price of gold. It's literally just that. And if you want to mimic the price of gold, go for GLD. This is one that I personally like. But again, as always, do your own research. So let me know down below in the comments, what did you guys do today? I'm genuinely curious, as we do have a pretty big community. We hit over 10,000 subscribers here on the channel, and I'm always interested in seeing what stocks the community out there is buying, as many of you guys are into different stocks, right? Some tech, some industrial stocks, whatever it may be, retail. Let me know down below in the comments. So let's just kick off the next portion of this video going over stocks that I'm watching right now, as we're seeing a pretty substantial pullback in many of these. The first one is Clorox, a bit of a boring company. Let's be honest. Clorox, ticker symbol CLX. They make the wipes, the disinfectants, whatever they make, right? They have a bunch of products, and this has kind of been a CV-proof stock. Really, it's been one of the best stocks out there when it comes to kind of hedging against the CV and so forth. As you guys can see, this stock has just been tearing it up, right? From $140 back in November, it rallied up to 200. We saw that drop from about 210 to 170, which wasn't as big of a drop as many other stocks out there in the markets during the big crash. And now we're rallying all the way back up to 220. And with today's weakness, we're pulling down close to that 50 SMA. And for me personally, guys, I'm looking at Clorox here as an entry point on the continuation of the uptrend, right? And for me, I'd like to enter in anywhere in this range. You guys can see the 180 SMA is at around $202 for Clorox. So the buying range I'm looking at is between 202 and $209 to about $208. That $6 to $7 window, that is where I'm looking to pick up the majority of my shares, right? If we get there. And I talk about all the time on the channel, right? Patience is key. Having price targets on your stocks is very key. And if they don't hit your price target, don't go into them, right? Because you have to have a plan outlined, and sticking to that plan is crucial. Once you deviate from that plan, things can go wrong. Unless you deviate from the plan, what's the word here? Intelligently, right? If you see something is going wrong, then you deviate the plan a bit, or you restructure the plan. That's okay. But if you have an original plan and you just do something completely left field, that's not good, right? So for me, I'm looking at 202 to 208 here on Clorox. Another boring stock, guys, kind of is Colgate-Palmolive. Pretty boring stock, CL here. And it honestly didn't do too bad during that crash. I mean, it did go from 77 down to about $58, but at the end of the day, that was a 20% crash, and the markets, you guys remember, were down over 30%. So it beat the markets in terms of that crash. And since then, we've been steadily uptrending. It's been a pretty nice ride here for the stock from about 58 back up to 74. And now we're seeing some weakness. We're at about 71, 72 bucks. We're holding that 180 SMA here at a higher low, although we did not consolidate and pop out quite yet. I'm still looking to maybe buy in at around 71 to about 70 bucks. That's the buy zone right now, in my opinion, at least, for Colgate-Palmolive. And from there, the goal, 71, 72 bucks, right? The goal up to about $75, $76. That's around a 4% move there. So for a boring stock, that's pretty good, right? That's not bad. 4%, that's pretty conservative there on ticker symbol CL. So the next one I want to go over and shout out, I don't remember your name, but in my Discord chat, again, link down below, free of charge to join, we actually had somebody call out Adobe. And Adobe, I don't look at this stock as much as I should. I don't track it as much as I should. And the reason why I say that is because, I actually use their products, and to be honest, I should know more about the company, and I do know about the company, but I should track it more, and quite honestly, this, from an investment perspective, is a very good stock, in my opinion, at least. Maybe not at these levels, but if we start to get down 300, 250, 200, that is a very good price long-term for Adobe. You guys have to realize they have a pretty awesome services business. Their suite of products is incredible, and when I'm looking at investments for the long term, I love companies that have business models of recurring revenue. I mean, look at me. I use Photoshop for the YouTube channel to make all the thumbnails, and I'm paying, what is it, like $23, $25 a month recurring. And imagine how many people are on that business model and that, or rather on those payments, that use their different products, and imagine how many people use it for business, use it for work, for pleasure, graphic design, of course, whatever. There's just so many people out there using Adobe, and I don't see it going anywhere. I don't see many competitors out there. I'm sure there are some, but Adobe is the top dog, at least from my research and for my, knowledge on the company, right? And at this point, long-term investment at $430. I haven't checked the PE ratio, but I'm sure it's sky high. I'm not interested at this point. But if we're talking about swing trading, right, which is what I do to make income in the stock market in the short term, right, I am interested in Adobe very heavily, right, in the 415 to the 420 range. At this point, we're at 430, and quite honestly, like I said earlier, I was about to pull the trigger on some of these stocks. This was one of them, and quite honestly, I want to wait a bit more to see tomorrow, maybe Friday, if we get down closer to the 415 or 420 level. And again, it's all about price targets, sticking to your price targets, and that's the one I'm sticking to. If we get there, I'll pull the trigger. But let's say tomorrow we rip and rally up to 440, 450. I missed the opportunity. I'll go on to the next. No hard feelings, right? So that's ADBE, guys. And I added it to my swing watch list here. Perfect. I think I didn't add CL. Let me add CL here very quickly, because that's another one that I'm watching, again, like I just said. And another big stock here that got some bad news from Morgan Stanley today, and I've been saying this in the chat, guys, as well, is Tesla, ticker symbol TSLA. They were down $40, down 4%. And you guys can see Morgan Stanley said that there's probably a pretty good chance that the stock here is overvalued, as a lot of tech-oriented investors are driving into the stock. You guys can see it right here. Tesla's overvalued stock being falsely driven by tech-oriented investors. So we're seeing a bit of a drop here, and do I disagree with them? Probably not, right? I think it is a bit overvalued here. I think a lot of the future growth of Tesla is already baked into the stock price, but It all depends on what your outlook is. If you have a 1 to 2 year outlook on the stock, yes, the stock's overvalued here, no doubt about it, right? I personally would look somewhere else to put my money if I have a 1-2 year horizon. That's just me, right? But if you have a 5 to 10 year horizon, maybe, just maybe, $900, $1,000. If you think Tesla's going to 2-3K a share, this is a bargain price, again, if you have a 5 to 10 year outlook. So it all depends on your perspective. Again, for me, am I going long here in the next 1 to 2 years if I don't have a position in Tesla? If I didn't, rather, which I do, I was buying in at 300. But, if I didn't have a position, would I be buying it now? Probably not, unless I plan on just holding it to retirement or just for a very long time, right? But from a swing perspective, we're seeing some good potential here. We failed at 965 to hold that. So at this point, we might be going down to 940. But overall, this one's going to need some wiggle room. I'm going to be honest, guys. This one's going to need some time to kind of figure itself out, because we do have a ways to drop to the 180 SMA, which has proven to be a support on this 4-hour chart. So we could be going there maybe on the downside. Another price target I'm looking at is 900 flat. That was a support from back on the 15th of June. That's another place we could end up holding. Again, 940 and 960. So 960 is breaking, it seems like. 940 support is what I'm watching for tomorrow. If we break that, $900 between 880 900, that's my buy zone. That is where I'm looking to pick up some swing shares for Tesla. So we'll see what ends up happening there. For all you Tesla bulls out there, let me know. I'm interested, right? Do you think it's overvalued here? If you're looking 2 years out, if you're looking 5-10 years out, let me know down below. So NVIDIA is another one that I almost pulled the trigger on. And NVIDIA was down, ticker symbol NVDA, it was down 2.3%, down $8.50, and we're seeing a pretty big support coming up at about 360. So tomorrow I'm looking to see, do we get closer to 360? Do we break 360? And the next target's going to be 350. That's kind of what I'm waiting for. And me personally, the buy zone that I'm looking at here on, NVIDIA is going to be exactly there, between 347, roughly 350. To about 360. Ideally, I'd like to pick up at 345, 350, but we have to wait and see what ends up happening, as we are still trading at around 370. So watch for tomorrow, 360, 340 here on NVIDIA. And two restaurant stocks, guys, that have gotten crushed quite recently. Well, one of them more than the other, and that one is Starbucks, and the next one we'll go over here in a second. Starbucks is getting crushed, guys, down 2.45%, down $2. And although the technicals are not looking too attractive, right? We're seeing a head and shoulders here. We're breaking both uptrends, so we're actually forming a descending pattern here, quite honestly, on Starbucks. I still think it's worth watching, because it's been beaten down so much, about $10 per share from its high at 83, down about 15%. So despite the technicals looking like crap, we might still have a relief rally in Starbucks. So for that reason, although I don't have a position in it now, I'm watching it. It's on my watch list, because it's one of those blue chip stocks that, long term, they're not going anywhere. They're not going bankrupt. And, the high was $95 before the crisis. So at these prices, if we're looking long term even, they're pretty decent, I would argue, right? That's ticker symbol SBUX. So I'm watching that tomorrow. The next restaurant stock is McDonald's. Very similar to Starbucks. We are seeing a bit of a head and shoulder pattern here on the 4-hour chart, which is not bullish by any means, but we are right around a support, which if we do hold, we do break out of this trend here, maybe back into the high 180s, 190s, we might slowly start to turn bullish. So for that reason, I'm watching McDonald's. At this point, I need to see it hold 184, 185, which it seems like it is right now in today's session. And quite honestly, I'm not going in probably until 190. So the buy zone on McDonald's here is going to be around 190, 192. And from there, the high previously from a couple weeks ago was at around $200. So that's a 7% potential here on McDonald's stock, ticker symbol MCD. And the last one here is MA. MA is another one, MasterCard, that I'm watching at around 290. We're actually at the 180 SMA right now on the 4-hour chart. This is another one that I almost pulled the trigger on, but I didn't. So I'm watching MA, looking at it from 290 to 295. And we got news that GNC, guys, is going bankrupt. And we all understand that. Now, let's just crack a joke. Let's be honest. There's this thing called bankruptcy investing, right? Which you see a company going bankrupt and you buy into them, right? This is what the Robinhood traders have been doing. It's quite funny. You know, you saw what happened to Hertz stock. They declared bankruptcy. They went down to 40 cents. Robinhood traders started bidding the stock up, and I'm sure other traders as well. It's not just Robinhood, right? And, the stock got bid up from $1 up to $6. Now it's crashing again, up 30% today. So this is a roller coaster ride. This is what I call bankruptcy investing. And is it intelligent? I don't think so, right? If you're looking at Hertz with the idea of investing in it, I think you're crazy because they're not turning it around, in my opinion at least. They're bankrupt. They're going under. These are companies, stocks that you typically want to stay away from. And GNC is another one, guys. I would not be surprised if this one saw a bankruptcy relief rally. It's crazy these times we're living in, guys. GNC, and somebody said in the Discord chat today, should I short GNC? And I think somebody said no, and I completely agree with that, right? You know, this could easily see a rally back up into the $1 range, $1.30 range, and you guys have to realize that is an 100% increase in the stock. So if you were shorting it and it goes up 100%, or if you had put options and it goes up 100%, you're going to get smoked, guys. You're going to get smoked. So for me, I'm not touching these bankrupt stocks. Robinhood traders probably will, but I for sure am not, and I'd love to know what you guys have to think about them down below in the comments section. So that's it for this video, guys. I hope you all enjoyed it. If you did, hit that like button for me. Let's try to crack 350 likes on this video. Also, consider subscribing to the channel if you haven't done so already. And check out all the free links down below in the description box if you want 2 free stocks from Webull. And if you want to be further connected with the Strive Smart community, all of those, again, are linked down below. So I'll catch you all in the next video. Stay safe out there. As always, peace out.